Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds to 9 o'clock. With news, China is facing some enormous policy challenges. But first, although New Zealand and Australian markets were closed yesterday, the rest of the world was in business. Equities are broadly lower. Singapore, Hong Kong, Shanghai and Tokyo all reported losses to start the week, and Wall Street is down 0.3% so far in mid-afternoon trade. This is a week where both the US Fed and the RBNZ will make rate policy decisions. No changes are expected from either, but the US situation seems better than many analysts expected at this point in the year, and New Zealand's policymakers must be counting down the 8 months to when low oil prices will have washed through the inflation data, and they have a chance to see rising prices. Cutting rates recently has had no effect on the currency, but it does exacerbate the rise in that is housing prices. Looking through low current inflation seems to be the favoured approach. China is admitting its ambitious One Belt, One Road offshore investment program, basically designed to create export demand for its products, is incurring larger losses than anticipated. The pivot away from an investment-led economy to a consumption-led one is going to be a rocky road more than expected. Cutting excess capacity is a difficult challenge due to an insufficient social safety net in the face of rising unemployment. And the problem of how to deal with shrinking state-owned assets due to mothballed production facilities is growing. Another major budget pressure on China is its ageing population. Beijing is now looking at replacing its pay-as-you-go state pension system, a bit like New Zealand's NZ Super, with individual earner accounts, a bit like KiwiSaver. The move is being forced because the current system is hardly able to deal with the ageing population. China is getting old before it gets wealthy. In Europe, an effort is being made to speed up the drifting negotiations of their TTIP trade negotiations with the US. The successful conclusion and public revealing of the detail of the Trans-Pacific Agreement provides a roadmap of how this deal can be done, and it somewhat undermines the fears of those opposed. But old Europe is full of vested interests who have much to lose from open trade, so the task will need real leadership. In New York, the benchmark US Treasury 10-year yield opened today at 1.89% and is now at 1.9%. China's wholesale rates are up too on market expectations their improving economy needs no more stimulus. The oil price has fallen today just under $43 a barrel in the US, while Brent is just under $45 a barrel. The gold price has risen $11 an ounce to $1,239 an ounce. And finally today, the New Zealand dollar opens at about the same level we were at this time last week. Now it's 68.5 US cents, 88.8 Aussie cents, and it's 60.8 Euro cents. The TWI is at 71.5 and still in the range it's been all year. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.